Got some M&A news this morning. Warren Buffett's Berkshire Hathaway agreeing to acquire Alleghany for more than $848 a share, $11.6 billion in cash, already adding to its large insurance holdings, including Geico and General Re. This is Buffett's biggest deal since Precision Castparts.
He now becomes CEO of Alleghany Corp. I've been following Alleghany Corp for 60 years. I read their annual reports. I had 4 big file drawers full of it because it was an interesting company.
Berkshire Hathaway agreeing to buy Alleghany. It's its biggest acquisition since its 2016 buy of Precision Castparts. Remember that? For $37 billion. This deal, $11.6 billion in cash, about $848 a share, which is a 29% premium to Alleghany's average price over the past 30 days. Alleghany, by the way, is an insurance company. And of course, Berkshire has a deep bench in insurance. That is one of its main lines of business. It, even before this acquisition, gets about a quarter of its revenue from insurance. So this looks to increase that. It also reunites Warren Buffett with the CEO of Alleghany, is a man named Joe Brandon, who was the CEO at General Re, which is owned by Berkshire. So a little bit of a homecoming there.
Alleghany was a great, synergistic, integrating acquisition by Warren Buffett and Charlie Munger. How did they do it? Here's how.
Jack Sisaleski, and he says in the annual letter that you wrote in February 26, you mentioned that Charlie and you saw little that excites us in the market. Yet around March 10th, the deal for Alleghany was announced, and then later the Occidental announcement, then the disclosure of the HP investment. His question is, what changed from the time you dated the letter to the time the investments were announced? Did the name suddenly become interesting in the space of a month and a half? Or half a month?
Well, Charlie, you want to give your version? I'll give my version.
Well, my version would be we found some things we prefer to owning to Treasury bills.
Yeah. And as usual, Charlie's given the total answer, but I'll talk longer and say less. We actually the letter's dated February 26th, where we were confessing our inability to find anything, which was a Saturday. But the day before that, February 25th, I got a email. Actually, my assistant, Debbie Bossani, gets it because I can't figure out quite how to handle the machinery. But so she brought it in. Or actually, she puts a bunch on the edge of her desk, and then I collect them occasionally. And there was a note, just a few lines long, from a fellow that was a friend of mine and that worked for Berkshire many years ago. And this was on February 25th, the day before the thing. And he said he had now become CEO of Alleghany Corp. I'd been following Alleghany Corp for 60 years. I read their annual reports. I had 4 big file drawers full of it because it was an interesting company, and all companies interested me. So I knew a lot about Alleghany Corp. And Joe said, this is my first annual report as CEO, and I just wanted to send it along to you, just like you write for your sisters. He says, I write this report as if I'm writing to you. And I sent a note back to Joe, and I said, I'm going to read it over the weekend or whatever. I said to him on it, which was true. I mean, I look forward to reading it. And I said, by the way, I'm going to be in New York on March 7th, and can we get together? I'd like to see you. And I think I may have said I got an idea. Well, I didn't have that idea the day before. I mean, it just, this thing happened to come in on Friday the 26th, and I knew I'd buy Alleghany at a price. And if he hadn't sent me the note, it never would have occurred to me to write him and say, why don't we get together on March 7th or anything of the sort. It just wouldn't have happened, except for the fact that Joe wanted to send me along this annual report that he'd just written. So that's the orderly and decision-making progress. I didn't call up investment bankers and say, will you prepare me a report on this, and what's your advice and all this stuff. I knew we'd buy Alleghany at the price we offered, and if it was of interest to Alleghany, fine. If it wasn't, but otherwise, if that email hadn't been sent, we would not have made an offer for Alleghany. So give credit to the fact that Joe had written the annual report, and if he sent it a week earlier, well, I wasn't going to make a special trip to New York, but I wanted to sit down with him and tell him what Berkshire would do. But that explains the $11 billion. And what happened was that a few stocks got very interesting to us, and we also spent a lot of money. What happened, the market, and this is really important to understand, in the last couple of years, the stock market is it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market, but and trading market, et cetera. But the market has been extraordinary. Sometimes it's quite investment oriented, kind of like it always you read about in the books and everything, what capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor. And that existed to an extraordinary degree in the last couple of years, encouraged by Wall Street, because the money is in turning over stocks. I mean, people say how wonderful you've done if you bought Berkshire in 1965 or something and held it, but your broker would have starved to death. I mean, it's Wall Street makes money on one way or another, catching the crumbs that fall off a table of capitalism and an incredible economy that nobody could have ever dreamed of a couple hundred years ago, but that they don't make money unless people do things, and that they get a piece of them, and and they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you may not say that you'd want that person. You'd like the other kind of person too, maybe, but that's where you make the money.